Hey guys, Roland with Impress Computers, and today I've got a good friend of mine, Jeff Davidson from Davidson and Associates, and he's a local CPA helping businesses in the area. Welcome, Jeff.
Thanks, Roland, for having me. I really appreciate it.
So, Jeff, tell me a little bit about yourself. How long have you been a CPA, and how did you get into becoming a CPA?
Wow. Okay. Well, yeah, that I don't know you have all that much time, but I've been a CPA since 1987, and I originally got into accounting when I was in college working part-time for a CPA firm. I spent some time as a IT major and realized that accounting was more interesting in terms of IT support provides the ability for people to do things. But for me, accounting is telling the story of the business. And that just really gave me a great feel that I could help people tell their stories.
So what you're trying to tell me is that your industry is more interesting than my industry.
Well, we always get accused of being boring because we're accountants. So I just want to kind of put it in perspective.
But you've been doing it a while.
I have.
What brought you to Houston?
So in the late 90s, I was working down in the Rio Grande Valley as a chief financial officer. And I got a phone call from a recruiter. They were looking for somebody to come up to Houston and work in an oil and gas company because they needed somebody who knew both computers and accounting. Couldn't imagine why they couldn't find anybody in Houston, but I was willing to take a shot. So I moved to Houston in December of 99, and I've been here ever since.
Oh, so you've been here a long time.
Yes, sir.
So we do IT for businesses in the area.
Mm-hmm.
One of the mistakes that we see business owners make is that they use their CPA for somebody that files their taxes, but they're always looking at the business through the rearview mirror instead of through the windshield. So what makes you different, and how do you think business owners should really be looking at their accounting?
Well, and that's a great question. The problem that most folks have is that they come into a business or they start a business and they don't know what they don't know. They know they have to do the minimum, which is to satisfy their tax filing obligations. And that's when they wind up encountering a CPA because that person has the skill set to be able to do that. The challenge for many small businesses is being willing to make the investment in expert help to assist them, if you will, in looking through that front window instead of just at the rearview mirror when they file their tax returns. It's a difficult decision for people to make because it doesn't necessarily directly contribute to their bottom line like sales does.
That they're treating it as an expense.
Exactly. And the reality is the businesses that do succeed make that investment one way or another, either through the school of hard knocks in learning that they've got to be proactive with their budgeting, or by spending the money to bring in experts who can help them navigate those waters until they reach the point that the business is stable and profitable for the long term.
And what type of businesses do you typically look after? Is there a particular size, any verticals?
I did not set out to specialize in any particular niche, and a couple of reasons for that, which I'll cover in a second. If I had a niche, it would be that I work with small businesses, everything from startups to companies that have 20 to 30 employees, revenue sizes from $0 to $10 million is kind of my sweet spot. These folks are just learning what they need to know. They hopefully realize they don't know what they don't know, and they're willing to be humble enough to get help to figure that out. Having said that, there are some areas that we have accumulated a number of clients in. We have a number of folks in the medical field who are clients. We have a number of folks who are real estate or real estate adjacent businesses. We also do a lot of work with international clients, both expats who are living overseas that we prepare stuff for, or companies who are based outside the United States that have desired to do business in the U.S., either through creating a subsidiary or through actually trying to develop a footprint in the United States.
And what do you think is the biggest mistake that you're seeing, or the most common mistake that people make?
The most common mistake that I've seen people make is not taking the time to properly separate and document their business transactions from their personal transactions.
Right. You kind of treat it as, well, it's my business. I can do whatever I want. And you're not accountable to anybody.
Exactly. And the reality is, at the very smallest levels, there's a bit of truth to that because you are just getting started. But the IRS wants their money. And the challenge is setting things up and documenting things so that they get what they're owed, but not a penny more.
So what happens if you're a business owner and you get a letter from the IRS?
Okay, well, the state or the feds may decide to send you a letter. And the good thing about this is it is the government, so they are slow to act unless they feel there's a huge threat that they're going to lose money. Well, they even if they think you're trying to hide something, they don't act overnight. If you are getting a letter saying that, we're going to put a lien on your accounts, that's going to be because you've ignored several other letters in advance. And so the time to act is when you get your very first communication from whichever agency is sending you information, and jump on it. Call your CPA and say, hey, the big thing to do is not to panic because you generally are going to have time to respond. Your CPA is knowledgeable about how to work with the IRS, and they can also get the IRS to pause their collection efforts and to give you time to properly respond to what they want.
Now, is having like credit card receipts, credit card statements good enough? Or do people really need to dig deeper and make sure they've kept all the receipts?
So, and actually the fact that you as an IT professional are asking that really is a great question, because in this day and age, there are so many potential options to digitize those receipts that you should be doing. There are software apps that will let you use your phone to take pictures of receipts. There are apps that will let you forward email bills that you receive. So the first answer to all that is you absolutely should try to keep the receipts because digital storage is so inexpensive these days. But having said that, if you are ever selected for an audit, credit card receipts are generally not sufficient to prove that the expenses were for the purposes you indicated on the tax return. I had a client who went through an audit and he provided a credit card statement to try to substantiate his travel and meal expenses. And there was a lot of pushback on it. They wanted to see actual receipts to show that there was a business purpose at the time. It wasn't just somebody taking their wife out to dinner. Unfortunately, when the IRS audits you, they're not auditing what happened last week. They're auditing 4 and 5 years ago. So the time to be proactive is 4 or 5 years back, because if the IRS comes back, you're going to have a hard time digging up what they're going to want to see.
Now, what about things like mileage logs? Do they still want to see that type of thing?
So let's talk about that. There's actually some really good things that people are not aware of that can help them maximize their tax deductions there. With small businesses, the IRS has something called an accountability plan that is required. If you have an accountability plan, and this is generally a one-page pretty set document that just says we are going to follow the IRS regulations, then you are allowed to reimburse your employees or yourselves as a business owner. Those reimbursements are tax-free to the recipient, but they are a qualified expense for the business. And the downside of that is if you don't have the accountable plan in place, then none of it is tax deductible, and it's all taxable income to the person receiving the reimbursement. Part of an accountable plan requires that you submit expense reports to document these receipts. And part of that expense report would be something to document the mileage, a mileage log if you want to keep one on paper. But again, in this digital day and age, there are several apps available for both Androids and iPhones that will track using your GPS that you can then turn around almost like a Tinder You can swipe left or swipe right to see if it's for business
I think
or personal.
Microsoft has the Mile IQ that's tied to your Microsoft account.
Mile IQ is definitely one of the big players. Everlance is another. And it all comes back to the same thing, trying to make it easy for you to keep that contemporaneous record. But if you have vehicles that are being used in your business and there's any kind of personal usage at all, because it's a vehicle that the owner uses, for example, you've got to track that stuff, because the IRS or the state, we keep ignoring them, but the state can be just as bad. They'll come in, and if you don't have the documentation, the presumption is none of it is qualifying, and they'll want to disallow as much as possible.
So the whole thing is be proactive, start doing it. If you haven't done it in the past, start doing it now.
Exactly.
And then hopefully you'll be prepared if something should happen in the future.
You're exactly right. And something to also keep in mind, the appearance of a client or a taxpayer is just as important as the actual substance. Let's say you are not doing the mileage logs, and after this conversation with watching us, you start doing it. Then the IRS comes in next year and audits you 5 years back. You didn't have those mileage logs. They're going to give you a hard time about it. But you will also have some moral justification on your side. You can say, look, we didn't know, but look, we're doing it right now. We're trying to do the right thing. And that carries a lot of weight. Well, it carries a lot of weight with anybody, right?
Yeah, it shows that you're doing the right thing now, and you did it before they knocked on your door.
That's exactly right. That carries I can't tell you how much that helps your position, even though it's not necessarily going to directly impact the period or the information that's being audited.
Now, what about some other things? You take a client out to dinner. Can you deduct that dinner expense fully off your books?
So the answer is yes, you can deduct part of it. The general rule is 50% of your meal expense is deductible, because they'll assume that you are going to eat and whoever you're with is going to eat. So that is the general rule. There are some varying exceptions. For example, if you order a meal for your employees at the office because they're working late or on a Saturday, you can generally deduct more. But the normal meal expense is 50% of the actual amount that's incurred. But that's also, to be very definitive, that's also meals only. Entertainment expense, such as if you had that meal at a Houston Astros game, for example, the cost of the meal would be 50% deductible, but the cost of entertaining your client at the Astros game is not. And that was a change that came about in 2017 with the Tax Cut and Jobs Act.
So even if you're doing it for marketing purposes, if you take a client to an Astros game,
it is not deductible.
How unfortunate.
I totally agree. And this is a temporary tax provision until 2025. My sincere hope, along with a lot of others, is this will go away. But we'll have to wait and see.
And obviously, elections are around the corner. Would you advise that people should actually read what's coming up for the vote?
Oh my gosh, yes. I don't necessarily subscribe to one political party or the other. But having said that, there are a number of things that are going to be happening there's a constitutional amendment, for example, that is going to be coming on the ballot this November, which affects the taxation of property, both business, personal, as well as real property. It's huge. But if people don't go out and vote, if they don't read it and understand the pros and cons of doing it, they won't make an informed decision, and the measure may or may not pass. The same thing with the general elections in 2024. Depending upon your own political views, you may have a bias towards voting for one candidate or the other, but you really should understand the political philosophies that are going to actually be on trial, because you may like somebody because they belong to one political party, but their actual views may be completely the opposite of what you think it's going to take to make the economy work.
And there's going to be implications and ramifications that could directly impact your business.
Absolutely. Again, when President Trump's Tax Cut and Jobs Act got passed in 2017, the majority of the tax provisions were only given a 10-year life. And I won't bore everybody with all the legal reasons for that, but they all expire by the end of the year in 2025. And so a number of those provisions are going to come up with different folks lobbying to either keep them or get rid of them. Great example would be the $10,000 cap on the deductibility of taxes, property taxes or other income taxes. If you live in a state that has a high income tax rate, for example, or if you live in a state with a high property tax rate, you generally are able to cap and easily meet that $10,000 limit. A lot of folks would like to change that, but there's also a lot of folks who would like to have that offset so they can lower other taxes. Where your candidate stands on that is very important.
Time to be informed. Well, Jeff, it's been great chatting to you today. You've got lots of useful information for business owners, aren't there? If somebody wanted to get hold of you and just find out a little bit more, what would be the best way of them reaching you?
We've got a couple of different options. We are on LinkedIn, we are on Facebook at CPA Davidson. My website is davidson.cpa. Our phone is 281-238-4442. And my own email address is Jeff, Jeff, at ismy.cpa.
Great. Jeff, thanks so much. And we look forward to reaching out to you sometime in the future.
Thanks again for having me, Roland.